In this video, we'll see how to prepare a trading account and profit and loss account. So in the problem, it says that you have to prepare a trading and profit and loss account for the year ending 31st December 2001. And the various item has been given. The first one is opening stock, then purchases, and so on and so forth. So remember, in the preparation of trading profit and loss account, first of all, you have to identify the various direct expenses and the direct income, which will have to be shown in the trading account. Then in the profit and loss account will be the indirect expenses and the indirect income. So now if you look at the first item, that is opening stock. So opening stock will be the first item in the trading account. Then you have purchases, which is the direct expenses, which will come in the trading account. Then we have sales. This is the direct income, which will appear on the credit side of trading account. Then you have wages, which is the direct expenses, which will be shown in the trading account. Then you have freight. This is also a direct expenses, which will be shown in the trading account. Then we have return inward. So this returns inward will have to be subtracted from sales to get the net sales. And the next one, we have return outwards. So this return outwards will have to be subtracted from purchases to get the net purchases. Then the next item is carriage on purchases. So carriage on purchases is direct expenses. It will be shown on the debit side of the trading account. And we have salary. This is an indirect expenses, which will be shown in the debit side of the profit and loss account. Then rent is an indirect expenses, will be shown in the profit and loss account. Then insurance also is an indirect expenses, will be shown in the debit side of the profit and loss account. Then we have commission received. So this commission received is an indirect income, so it will be shown on the credit side of the profit and loss account. Then we have carriage on sales. This will be indirect expenses, will be shown on the debit side of the profit and loss account. And the closing stock will be the item which will be shown on the credit side of the trading account. Let us look at the solution. So the trading and profit and loss account of X for the year ending 31st December 2001. So the first part, it will be your trading account, and the second part will be your profit and loss account. So the trading account starts with the opening stock for rupees 1,50,000, which will get the amount from the problem itself. Then the purchases, less the returns inward, so we'll get the net purchase for rupees 2,52,000. Then you have wages 4,800. Then carriage on purchases 3,500, and freight for rupees 3,000. Then on the credit side, we'll start by sales. Then you have to less the returns outward, which will get the net sales for rupees 3,50,000. Then take the closing stock for rupees 2 lakhs. So in this problem, the credit side is greater than debit side. So the remaining balance will be the gross profit, which will be transferred to the profit and loss account. So now the second part is the profit and loss account. So the profit and loss account start either with a gross profit or gross loss, depending upon the trading account. So in this case, the trading account shows a gross profit. So this gross profit will be brought down to the credit side for rupees 1 lakh 1,200. Then we have an indirect income, that is commission received, which will be shown on the credit side for rupees 2,900. And we have salaries for rupees 35,000, rent for rupees 15,000, insurance for rupees 2,000, then carriage on sales for rupees 2,500. And again, the credit side is greater than the debit side, so the remaining balance will represent the net profit, which we transfer to the capital account in the balance sheet. So point to be noted here, in the preparation of trading profit and loss accounts, remember you have to debit all expenses and loss, and you have to credit all incomes and gain. And in the trading account, only direct expenses will be taken, and on the credit side in the trading account, only direct income will be taken. But on the profit and loss account, the indirect expenses and loss will be taken, and the indirect income and gain will be taken on the credit side.